Hi, I'm Elliot Berman, and welcome to this episode of AML Conversations. I'm here with Jennie Jonas, our Senior Vice President of Financial Crime Advisory, and we're here to talk about the latest wave of Fintechs receiving OCC limited purpose trust charters. Jennie, how are you today?
I'm good. Finally over COVID, which
Excellent.
is a nice place to be.
Indeed it is. Well, thanks for joining me today. And this is a topic, obviously, that people are very interested in. We've seen a fair number of these charters issued in the last 4 to 6 months. And so let's start with what's behind the surge. Why do you think these non-traditional financial service providers are now looking for ways to participate in the more traditional banking system?
I mean, first and foremost, I think, Elliot, it comes down to, I think, the environment that this administration has really created, especially in the AML compliance space. We've got anticipated revisions to regulations, and I think it's created this broader climate, even broader compliance climate, that I think gives the sense of a slightly lower bar to entry. It's a safer environment in which to expand, I think, a compliance program, and more specifically an AML program. We obviously also saw, and I believe they're in effect now, the OCC finalized amendments clarifying the scope of permissible activities for the types of charters that these organizations are going after. So I really think that the trust charters, which most have been applying for, have really emerged as a vehicle for innovation, for growth, which is really in keeping, I think, with their generally innovative and fast-paced culture. We've also seen as we've observed, the successful, at least, applications going through the process. They've been moving far more quickly than they have through the end-to-end applications process than they have in prior years. So, I just think it's all in keeping with the fast pace, as I said, and the innovative culture within these types of organizations.
And you alluded to the fact that they're looking at using these for a platform for innovation. But what do you think they're going to, what are going to be the first handful of services that you expect to see them providing using these charters?
Yeah, so maybe the first thing to clarify is the difference in the types of charters that exist. There's like the limited trust charter, and then there's the full service, if you will, charter. Full service, you're basically going real bank kind of level there. But with the limited trust charter, you don't take deposits like a real bank does. You can't extend lending products to your customers. The limited trust charter really centers the organization on services like servicing assets, like digital assets, or at least specifically stable coins. You can also hold cash treasuries, but it's a much more limited remit than the full scale charter, and regulators really hold tight to that. I think the other change that you see typically is, or difference, I should say, between the two is the at least from a fintech going into even a trust charter, is you're getting that single regulator, as opposed to multiple state licenses and your services being tied to those states. As a result, you're getting much more flexibility, broader authority with the trust charter, or with the full service charter too.
Right. Agreed. So those, if there's organizations who are going to use one of these limited purpose charters in the payment space, for example, they currently would be under the federal regulations, the FinCEN regulations. They would be an MSB, and an MSB, there's no, you register with FinCEN, but that's not your authority to do business. That's
Right.
really more of an informational filing. Your
Yeah.
authority to do business in a given state is whatever their money transmitter statute, or sometimes they're called
Mhm.
money service businesses, but a lot of them were money transmitter licenses. And you're right, under the OCC provisions, the statute, the regulation, you really can't operate US wide. And so you just get out of the compliance burden
Yes.
of applying to 48 states or 42
Yes.
states and keeping those licenses up and all that other stuff.
Yeah. Yeah. I'll add here, Elliot, that I think I know a lot of conversation these days comes back to digital assets and how that is expanding across just the financial services sector in general. But I do think that one of the most attractive aspects of this is being able to go into that space without having to go full-fledged bank for these sorts of organizations. So I hypothesize that that's one of the main draws to these sort of applications and the volumes of applications that we're seeing.
Yeah, and as you pointed out, a full OCC charter, just to keep apples to apples, there are other charters. It could be a state charter, but full OCC banking charter application and the services you're required to provide, like take deposits and make loans and things like that, is in many cases is putting some of these businesses into spaces that they're not used to. So it's not just, well, we have all these fancy new authorities, but now we have to figure out actually how to use them, as opposed to having a business plan that says we're going to fit into this construct. What do you think is the biggest misconception that both maybe the applicants may have about these charters, but also the general public and even the financial community?
Yeah, I think really the first one, I think there are two really. I think the first one is that, well, in some ways it is a stepping stone to becoming a bank. I mean, you could go through these phases and get to the full charter certainly in the future. I don't think it truly is a stepping stone. Like I mentioned earlier, when you get one of these limited trust charters, it's very tightly controlled from, at least from a regulatory perspective. They expect the organizations who get them, the institutions that get them, to remain very tightly aligned with the what they're permitted to do, right? The trust, the custody, the asset servicing activities that are tied to these charters. So I think that's one. I think the other one really is the compliance requirements. I still think that there is, and we're seeing it as we talk to clients, an expectation that the compliance programs, the AML specifically, compliance programs that go along with these trust charters are comparable to banks, especially if you're going into the stablecoin space too. You know, you need the monitoring, KYC screening and resources. You need the governance, be it policies, procedures, the 3 lines of defense. There's a lot of requirements that, even though you're not going for that full charter, that you still need to implement. So I think there's still certainly a cost that is associated with that. And a lot of work that needs to go into it before you're successful in achieving or obtaining that charter.
Well, and that's been in my experience, that's been a challenge for some of the, some people in some organizations in the fintech space over the years. They're innovators in terms of, how can I solve a problem? How can I make this process more friction free? Things like that. And then when you say to them, well, when you perform that service, however friction free you've made it, it's subject to these rules. And I can remember, certainly 10 years ago, having clients look at me like I was speaking a foreign language that they didn't understand. And it's like, well, you're going to offer payment services. There are rules about that. And just because you can do it faster doesn't mean you can operate outside those rules. Now sometimes the processes change. I mean, we've all seen that in the U.S. with the morphing from things like the ACH system being solely an overnight batch process to being near real time, through both innovation in the rules and innovation in the technology to meet the general market demand of being able to move money faster. But it is, that doesn't mean that the requirements to comply, as you just talked about, go away. They have to be adapted to. So, what are some of the other risk management or governance things that you think the recipients of these charters are going to need to focus on, where they may not have been focusing on when they were operating outside the charter?
Yeah. We talked about a couple already, the single oversight versus, the fragmented oversight, if you will. I think the other aspect to if you want to call it oversight, is that before these organizations would have obtained these trust charters, their compliance requirements essentially would have been bank imposed, right? They're not, and certainly not necessarily regulator examined, not to the level of scrutiny that they will subsequent to getting the charter be subject to. So I want to revisit, this notion of a kind of like the bank grade or bank commensurate bank governance and risk management like structure. I think there's certainly more formality there than what the fintechs who get these charters would have experienced. Historically, there's the notion of an independent and experienced board. So in that case, I think one of the main distinctions is going to be the board in and of itself, because it's not certainly a requirement pre obtaining the charter, and it's the experienced nature of the board too. Right now, if you're going into and starting to go and move into the banking space, so to speak, now you're talking about having people on that board who have that type of experience, have operational risk experience, I should say, compliance risk experience. It's really important to have a board that is independent, experienced, and is going to challenge, as we tie it back to, our sweet spot, which is financial crimes, the financial crimes programs, the AML programs. Right. I also think a net new expectation that a lot of these fintechs will experience is there is a very clear expectation today that you have, if you're considered or hold one of these charters, a clearly defined, risk appetite statement. You have escalation frameworks. You have a really good oversight structure beyond the board. For example, you've got those three lines of defense solidly established. So you've got audits and second line compliance functions having that oversight over the day-to-day operations of financial crimes processes. So those, I think, are really important things to recognize, because it's not necessarily things that are very common or that I've commonly seen within fintechs. Maybe some, and I certainly don't mean to cast like a broad brush statement on that. There's certainly some organizations that are a bit more advanced in that regard, right, but it certainly becomes more of a formal expectation than it would have been previously. So those are a couple I'd mention.
Yeah, I think the really large fintechs have been through some of that conversion, if you will. Mm-hmm. They started out again as innovators for the purpose of innovation, and I don't mean that in a negative way. And as they got bigger and wanted to be in more jurisdictions and more businesses, they started to get asked a lot of questions about even their anti-money laundering, anti-fraud programs. And as you and I both know, many of the people that they hired to build those programs came from banks.
Yes.
Which is fine. I mean, you go where the knowledge base is. So they went where the knowledge base was. Yeah. Now, there's still a tier, in my experience, there's still a tier of what I'll call medium size
Mm-hmm.
fintechs that probably getting one of these charters would be interesting, but I think from an operational perspective might be a stretch for them.
Yeah.
We'll see, if some of the medium-sized ones go for charters and how that works for them. I think I'm not going to name any names, but I think
Mm-hmm.
some of the big fintech organizations, crypto exchanges, and the names all of our listeners would know. Um, they've already had to build a lot of a similar infrastructure. They may have to tweak it a little bit, but that won't be a big shock.
Yeah.
Are there other things about the AML compliance and fraud compliance obligations that you think, excuse me, will be impacted on the companies that are getting the charters or seeking the charters as opposed to how they've operated in the past?
Yeah, I think the other two things I would mention is obvious, and it goes back slightly to us talking about, the OCC and the single federal regulator. I think there's going to be more rigor around exams. I think if there's issues identified, how quickly these organizations are remediating those, or even separate away from regulatory issues that are raised, even issues that they've self-identified are resolved. The OCC loves to see progression through
Right.
the issue management life cycle fairly quickly, or as quickly as is possible and reasonably doable. So I think there'll be more, I would expect more challenge around that for them. And then I think because of what these charters allow fintechs and other organizations to do, what I mean by that is that, you start to internally set up and take ownership of some of the operational processes that you would have potentially otherwise outsourced or had with partner banks. I think in a positive way, it gives clearer, I think it can take you to a clearer place in terms of accountability and roles and responsibility. We know that some of these BAS related enforcement actions have come down to that specific or challenge in a specific area, right? The lack of clarity, things getting lost or dropped in a gap, between the organization and a partner or a provider, or a banking as a service partner. And so I think, at least on a positive side, this evolution for them comes with some reduction, I think, in risk in that space. So
Yeah, I agree with that. Another looming, and I don't, maybe that's a little too strong a word, but as we both know, the an updated proposed update to the program rule is now out and about for comment, and realistically would probably have a go live of some time late in 2027 by the time it works its way through all the different processes. But there are some expectations in that proposal that are likely to survive the comment period, like a required risk assessment and things like that, that these organizations may or may not have faced in their prior operating format, and they will need to do all the things that traditional financial services companies will need to gear up to do, and that is figure out what was I doing and what do I have to do differently. I don't think that's a bad thing, but they will. Some of them will be because of a new regulatory oversight regime, will need to think about meeting those kinds of timelines where they may not have been driven by those timelines in the
yeah.
past. Yeah.
I think, Ellie, it's also important to recognize as we talk about these additional requirements, whatever you want to term them, is that a lot of these things have to be in place before you are successful with getting that charter. You need to be able to demonstrate that you are going to have, not that when you get the charter, you're going to introduce all of this rigor. And so it's really important for fintechs to be investing up front in creating routines, processes, controls, technology that helps them do that from the get-go, because they will be subject to greater oversight in the first 12 months to 2 years once obtaining these charters. So it's important to recognize that this isn't, what we're talking about isn't an after the fact consideration. It's something that needs to be demonstrated up front to the extent you can.
It is part of your launch activity.
Mm-hmm.
So I'd like to finish up by going back to something very early that you talked about and talk about it just for a moment. And that is that we have seen, in addition to this wave of applications, we have seen the OCC itself come out with some proposals to expand the range of authority that these limited purpose charters have.
Mm-hmm.
And as you and I were talking before we recorded, in the past, the OCC has granted applications that were brought to them in the limited purpose space for what I'll call new activities, where the applicants could, show the OCC why it fit the purpose of limited purpose charters and things like that. So have you thought at all yet about what some of those new things beyond that, the core of fiduciary related, custody and asset advice and asset management and things like that. Do you have a short list of things you think people might want to try to get approved at some point?
Don't actually, Elliot. I'd be really curious to hear what your perspective.
I'm not sure I know yet either, but I think that, and why did I come back to that? Because you really appropriately put your finger on the fact that the people applying for these charters, not 100%, but most of them, they got into financial services because they saw an opportunity to innovate. And once you get into the to the regulatory matrix of the an OCC limited purpose charter, that can be expansive for you, but it also has its own boundaries, guardrails. And if you decide that you want to expand, you need to then go sell the regulator on the fact that it's within the powers, or get actually make an application and have them determine that it's within the maybe unenumerated powers, if that's really a term, of what the operating charter that you have. So maybe that's just that'll be something interesting for all of us in the industry to watch. I'm sure there will be some of those applications. I'm not sure I know what they will be. I'd love to tell you I'm have a crystal ball, but I don't. But there is a process out there that I think we will see get used, and we've seen it in other venues. And at other times, there was a time when limited purpose charters, not trust charters, but limited purpose OCC charters were issued for the purpose of, in the payment space, managing the and this is going back to when the Fed had many zones for check clearing, and the key was to try to maximize float by running your checks through a limited purpose bank that was in a multi-day zone as opposed to an overnight zone, and things like that. And people hadn't really thought about it, but again, not a trust charter, but they offer some other limited purpose charters. So I think there'll be some innovation in the chartering space beyond what we're seeing today, and that'll be interesting to watch.
Yeah, that will be interesting. It's going to be interesting to see what happens, not just over the maybe next 5 years, or maybe we should time bind it more to the term of this administration, and then what goes on past that. I could feasibly see some of these fintechs who are obtaining these limited charters go on to try to get into the full charter space to become recognized as a bank, because it will give them access to things like foreign exchange, international transactions. but at the same time, and obviously what we mentioned earlier, the ability to take deposits and lending and so forth. But yeah, it'll be really interesting to see, because obviously you and I know that there can be shifts in the, let's use the term I used earlier, climate, and the tone from regulators that can directionally impact, I think, the way this financial services industry in the US grows and develops.
Absolutely.
So it'll be really interesting to see, and if there's regulatory action taken against some of these fintechs who've gone on to start expanding their capabilities. I think that'll be another factor that influences the way this continues to evolve and shape in the coming years. So it'll be interesting to monitor.
Yeah, the other catalyst for significant change in the regulatory climate is, a catastrophic problem, whether it's an economic, the economy generally, or a significant bank failure or sequence of bank failures. And again, I'm not predicting that, but that is another catalyst that we've seen.
Right.
Major bank regulation over the years, bank regulation and the banking laws, in some ways, is a history of the catastrophic problems in the economy. Not purely, but you can sort of track some of them going all the way back to the Great Depression, actually.
Yeah. I do think though, maybe we can put the crystal ball to one side and just talk about for a second what we think will happen over the next couple of years, at least, before maybe there's that administrative change, or in fact, the kind of regulatory cycle of examinations has gone through and things start to be surfaced through those exams. I do think that these charters will continue to be a very viable and an attractive path for a lot of these fintechs to step into a more regulated environment, to even grow and expand their footprint. I think there's a finite pool, though, of fintechs and similar organizations that will want to go this route. But I do generally see this trend as continuing. I don't think it's a peak or a flash in the pan, so to speak.
Yeah, I agree with that. Also, unlike other business forms, let's spin up a company and try to do X. Oh, that's not working so well. We'll just shut the company down. I'm not saying you can't shut down one of these charters, but you don't see banks, banking charters operated for a little while, and then it was, well, that was interesting. I mean, you generally see them merged out of existence into some other entity or something, another bank. I don't want to say it's a one-way street, but it's more one way than the regular business corporation, where you form one, you form limited liability, whatever it is. You try it for a while, and if it doesn't work, you can actually just sort of wind it down. Winding banks down, I'm not saying can't happen, but doesn't happen very often. That's just not how they've been operated. And part of that is the idea that there are these long, ideally permanent institutions in the financial services space. So we'll see. I mean, there have been waves of bank failures and things like that, but those have been caused by mostly external economic impacts. All right. So last thought.
I just think that this is a very interesting space to monitor. I think over the years, there have been things that have driven trends or been focus areas for regulators. I think this uptick in applications, and successful applications to boot, I think it'll be interesting to monitor how that impacts the next kind of wave of regulatory focus. So I think it's really a space to watch. And I think from a competition perspective, stepping outside of the financial crimes compliance space for a second, I think from a competitive environment perspective, I think it shakes up the industry a little bit.
And that's a great place to stop. So if you'd like to talk more about this topic, feel free to reach out to Jennie or anybody on her team. They're happy to talk with you and help you think through these issues. Also, for those of you in our audience who are not looking for one of these charters, but want to think about what it'll be like to do business with an organization that has decided to get one of these charters. That may be a little different in the future than it has been in the past. So Jennie, thanks for your great insights, and thanks to our audience, and we'll see you on our next episode of AML Conversations.
Thanks for having me, Elliot.
My pleasure. Bye-bye.